Good morning, everyone. Hope you're having a fantastic morning. It is Monday, 17th of April, 2023, and we are needing to go through the markets. We need to plan for the week or go through the week. So, currently, we have GDP out of China today. We have some average hourly earnings, including excluding bonuses out of Britain, and we have some Bank of Canada was last week, but some CPI out of China, out of Canada. Anywho, um, my current theory about life, right? We had some hawkish uh, comments from Fed last week. I don't know what that guy was called even. Was called was it Waller or something? Not to 100% certain on that one, but yeah, this guy, yeah, was Waller, Christopher Waller. That and they're talking about like still not peaking. That made dollar strong, which is fair enough. That's all right. That's all right. But it made dollar really strong. Now I got a question from somebody in Discord, and there's no hate to that person. It's not stupid to ask a question, but the person basically asked me or asked in the group. Let's say if I can find it. Yeah, of course, always when I try to. There you go. So the question was like, why did dollar move so much? Like it's out of the ordinary, and I always say no, it isn't. And that is all okay. And we all start from somewhere in terms of understanding how much the market moves and how deep it goes. And the person goes over to say, COT data says this, smart money tracker says this, but it doesn't really explain the move that happened on Friday. I would argue, as a 9-year trader, that whatever happened on Friday was very normal. So for me, mentioning this is only for us to be okay with moving markets. They happen to move a lot. The only question we have to have is, are we standing in the way, or are we riding the train, or are we going against the train? And if you ride against the train, you're most likely going to get hit. So that's kind of just that. So I really appreciate the question, the concern. It brings good discussion. So dollar found support on Friday from because of Fed. A lighter data calendar this week suggests it will focus on central bank for their position on the need for and the size of final monetary tightening in May. They doubt that the dollar is going to rally much further. We also saw risk of taking profit taking on long HUF and CXK positions, meaning we have now seen a pretty deep pullback on dollar, but we all know that, right? We all know what it was about, right? We saw New Zealand dollar, as I proclaimed last week, was going to fall. I said 12th. This is 12th. What's the 12th? I need to go on my calendar. 13th, actually. Yeah. 13th. And then what happened? 14th? It fell off. It fell off the sky. And on Friday morning, I got an entry here on Euro New Zealand. So what I'm going to do next, I am going to be less dollar. I'm going to be less yen. I'm going to be more New Zealand. Now that's either going to confuse you or annoy you or whatever, because I normally talk about news. I normally talk about one specific pair. This is seasonality 101, flat out, nothing else in between, right? Meaning, that what is going on is price action, is position sizing. Meaning, am I going to sell New Zealand dollar? Should we sell euro dollar? No. Because if Fed peaks in 2 weeks, let's say 2 weeks, the imminent, I would say, dollar weakness is going to come again. So for me, I am more like, okay. So I'm a bit ambivalent about New Zealand dollar, American dollar. I'm also a bit ambivalent about New Zealand yen. But they've all fallen nicely and dancely. So this stream is, of course, about trade setups, right? We're going to find trade setups. So in my view, I am going to go across the world. I am going to give you the updates, and then I'm going to go through trade setups. Is that cool? Good. If you have any currency pairs or pairs you want me to cover, please mention it, as we will go through them later on. But I need a mental space of where you are right now. So at the moment, dollar. What did dollar do on Friday? Did dollar make a new higher high? No. Did dollar become bullish? No. Did we have a deeper pullback? Yes. And you're asking yourself why or how and what happened. I'm just going to mention that we went down to target on Friday, meaning that was the bottom. And what happens when you hit the target for the week? You generally pull back up again, right? You generally come back into resistance. You generally come into a better trading position. Now, if you're a seller on dollar, would you sell some to pivot in the downtrend? Yes, you would. So that's a no-brainer. Will this one stick? Completely different question. I don't know. Maybe. So Australian dollar is also seasonality-wise bearish for the upcoming period. Meaning that both New Zealand and Australian dollar would likely be weak going forward. 17th of April is the peak, down to 27th of May, 80% of the time, 2.4% return. Yeah, swap ratio is okay. It's not fantastic, but it's generally red across the board. Generally not a pair or a currency, by the way, to look into for a buy seasonality wise. I was not supposed to look at this guy. This Chris Weston, I'm starting to have a fun of him lately. But generally, you can go to Twitter and you can find his playbook for this week. I'm not going to bore you with it, other than this is where you can find it. You can probably post stream. I can't. But yeah, so there is some fetch book this week. There is some initial jobless claims. There is some S&P Global Manufacturing PMIs on Friday. There's UK employment. There is March CPI. There is Wednesday CPI in Europe. There is some RBA minutes. Okay, fair enough. Nothing fancy, nothing dancy, but still, there you go. I can probably give it to you like okay. Good morning, Cisco. Good morning, Roxana. So welcome. So what are we going into right now? And we are supposed to go over to charts. Okay. And I know this one is very one. What about USD yen? I don't remember the position you had on that one, Roxana, at current. But I want to mention something to you guys. I think that USD yen going forward this year is going to give us. I don't know. I don't know if the current price is going to be the peak. Right. That's not the point. The point is the forward guidance that I have on USD yen is we're going down to 120 by the end of the year. So we're 134 now. Mark my words. By the end of the year, we should have hit the 120. Let me explain. If Fed peaks, as they would probably do this year, if they decrease interest rates this year, as they say they're going to do, as Marcus prices in, dollar's going to weaken. Who's going to get the strength? Who is going to get the strength? In a risk-off scenario, the yen is going to be in the risk-on scenario. Yen is going to get some of it, because if you go back to when dollar was weak as weak isn't. So when it's dollar weak, dollar was weak back in most of 2020. If you then look at use the yen in the same time period, it fell. Was that because yen strength? No, it was dollar weakness, meaning that this one is then most likely to fall down. Now, also, when it comes to yen, they are probably going to be the risk-off play, meaning you will buy yen instead of dollars in terms of securing your money, because you are going to get less returns in America going forward because of decreasing interest rates in terms of carry trade, meaning that if Japan's inflation keeps rising, that's the play you want to take. That is smart money and moves. So basically, which central bank is going to increase interest rate going forward, and which one is going to decrease, and then you buy the one that is increasing, and you're selling the ones decreasing. And my projection there is going to be yen. That's what they use the yen. It might also be Australian dollar, US dollar, but last meeting, RBA peaked interest rates. So that's a dead case. Okay. Good morning, Martin. Hope you're having a great day. Good morning as well. I just want to say I mentioned your question earlier in the stream. Hope that's okay. But basically, what I said, just for 2 seconds, since you're here, I applaud your question. I like it. And okay, I just got a phone call right now. 2 seconds, people. Good morning, everyone. Sorry for the music. Sorry, I couldn't find a good music. Sorry. So, okay, so I just talked to somebody that tried to call yesterday and today. And people are like, oh, line busy, line busy, line busy. I'm like, dude, are you ignoring me? Are you ignoring me? If you call someone at 8 a.m., you call someone at like 8 p.m. and like line busy straight. So I'm like, okay, cool. Either you blocked me or you don't want to talk to me. I'm just kidding. He never knew me. So just that. You still had above 140 once more because of BOJ. Most important is 2% inflation goal, so they can't change policy. Get wise. Hear me out, and we will back to disagree by the way. But my point is not the yen. My point is the dollar, and I totally agree with their current policy makes yen weaker, right? But in a weak situation, dollar becomes weaker. So, in as much as I think that yen should weaken going forward when Fed hits, what do you call it in English? When Fed peaks, when we are done pricing in recession, if we then do so, we are then going to cripple down to 120 by the end of the year. Meaning that short term we can go up to 140. Totally okay, totally all right. That doesn't bother me 1 second. But what would be the end of the year, the long term one, is dollar weakness in my opinion, because it is, we have inflation. It is now coming down a bit. We're still gonna have interest rates, but the moment they peak, I believe dollar weakness is gonna come. Good morning, GJ. And I forgot Joe. Sorry. Boom, Joe. Good morning, GJ. I found your channel. I wish I found you long back. Great. I'm sorry, mate. Jump along and see whether we can make some money out of here or not. Meaning. Yeah. Okay. So I tried to go through the world, but I got stuck on a call. So sorry. Then we go to New Zealand. Seasonality. Joe. Okay. Oh yeah, Poppy. I've noticed that having shoulders on USDN. Yeah, I wouldn't bother too much about that though. I wouldn't. And you remember my projection or my outlook is completely disregarding of technical analysis, right? USDN down to 120 is bold. It's ridiculous, but it's completely lack of technical analysis. So, New Zealand dollar. I don't like to short this one. But hey, it is doing what I wanted it to do. I wanted it to fall. I put those prices up last week. I said central pivot M3. May the trading guys be with you. Sell if you want. I didn't, because I don't sell weak dollar. And it fell like a ton of bricks. Why? Because of Waller Fed. Was more hawkish than expected. And then we fell. Okay, fine. Now, I expect New Zealand dollar so and so all the way until this day to be bearish. Thank you very much. 17th of May, couldn't find on the chart because TradingView is TradingView. So 17th of May, sorry. There, yeah. Okay. That's my bearishness. And technically then, bearish, I am supposed to look for resistance every time, every week, every moment I go forward. Get wise says, yeah, when Fed pivots, that's when the flight to safety comes up and UA drops. Gold will be the best option this year, likely at 2,500. All right, cool. How long have you been trading it wise? And no disrespect, by the way, just wondering. Yeah, I just see your knowledge. That's all. or your projections. That's all. So cool. So technically, I'm supposed to shortest, but or Cincinnati West, I'm supposed to shortest, but not happening with weak dollar. So I'm just gonna play it out like a coward and say, well, that's the price to sell, and that's the price to sell, and I'm not gonna sell it myself. I'm just gonna say, okay, let's see how it works out this year. New Zealand, that was 62.34 and 62.60. New Zealand yen, same shenanigan. I'm not interested, but I'm going to other than New Zealand pairs. Don't worry. Where central pivot M3 sell looks very flattering as a New Zealand weakness trade. But then I expect yen to be weak, so it's kind of like it's a no-go shown. But those are the prices going forward if you want to do that. But the one that I do like to buy 75.50, 76, 76.50, not 77, unless we go higher high and higher low. It is Euro New Zealand. A beauty of a trade on Friday. Love it. I just need a pullback. Okay, cool. Thumbs up, bro. So what is it? What is this seasonality on Euro New Zealand that I'm talking about? This is too slow, bro. So from basically 12th of April, it is 80% winning chance. Most of the year is bullish. Almost 1% sharp ratios. If you do sharp ratios, it should be between 1 to 2. That is good. So what is good sharp ratio? Should be greater than 1.0 to consider acceptable to good buy investors. And if you're 0.5, it's not really great. The other one that you can use in your assessment of your portfolio, is it profit factor? No, Sharpe ratio. Yeah, Sharpe ratio. So when I did Sharpe ratio on one of my clients earlier, this last week, sorry, it was 2.4, I think 2.45. So if you know, you know. So going forward, if you go back to like previous years on Euro New Zealand, going into 2022, this April, May shenanigans from 12th, give or take here, all the way up to 17th of May. I'm just trying to find 17th here. That's kind of, so we have highs, but you also have very deep pullbacks. So those pullbacks last year was 250 and 260. So if I at any given time say we were going to pull back 260, that is all the way down there. That is far below my entry. So I'm not going to do any stupid highs. Now, I've done that before. We're not doing that again, bro. Hi, man. What's your check on CAT short fundamentals, seasonality plus oil price? That's a question I will answer later, Jessica. Please enlighten me later on when I remember it. Because I will do that. The other one is Aussie New Zealand. Came out of the, what do you call it in English? Came out of the open yesterday with bullish, came out, went higher. The question is, are you going to buy it? The answer to that is absolutely no. Well, you can. If you're a day trader, if you're scalping and you think, wow, that looks like a great idea, bro. It is not very easy for me to say, oh, we should buy here when we have hit zero support. Meaning, when you have You need some kind of support to buy. So maybe maybe London Open. Sorry, London session early or London session. This comes down, I will take it up. If this one comes up back down in like New York-ish, you'll probably see a ping that I haven't have bought this one. This is another one that I am systematically just blindly buying. And if you have never done it before, never do it yourself. It is basically what do you call it in English? You're bound to lose money if you invest into things you don't understand or you don't have control over. It's just the laws of trading, right? So New Zealand CAD, straightforward, technically bearish, beautiful as it becomes. Sure, they were short on Friday, totally up to you. But I told you guys on Friday, so okay, some people on Friday, sorry, some people, not all of you guys. Sorry, my bad. But I went out to run in the rain and it was horrible. So I forgot to inform everyone out there. But basically, the prices you are going to defend this week, if it so do become hit, if it becomes engaged, you have to defend 83.40, 83.50. Those are the prices you need to defend. Meaning, if price comes back up there for whatever reason, if it is a burst of news flash or whatever, news is only going to work in your favor. That's your belief. If you believe otherwise, trading is for somebody else. If you believe this is going to fail, trading for somebody else. Give me the money and I will double it or whatever in a year or whatever. And if you are going to take my money and I'm going to invest in you and your trading, and if you don't sell that trade, new seasonality base is bearish, everything is working with you. Get out of my firm. So that's my little small talk there. Meaning, no fear, no hesitation, nothing with a what about, but there is nothing of that. Once you have gotten your trade set up, once you've gotten your price, once you've gotten your seasonality, once you've gotten your technical analysis, what on earth else do you need? Execution. With reasonable stop losses, with reasonable lot sizes. We're not going to break the bank. We're not going to do stupid things. But what we are going to do, we're going to sell that relentlessly. Without any questions. So, gold was asked for. What is your take on gold? If dollar weakness persists, this week we're likely to hit 2100. Yes and no. Seasonality wise, which I talk about a lot, is very bearish on this upcoming period. And we saw on Friday that we did fall pretty hard. And I'm probably going to sell that seasonality one pretty hard, to be honest, because it does drive the market relentlessly. Meaning, from April now until like May-ish, we are generally quite bearish, except for 2021. If dollar weakness comes in, is this one going to go higher? Is this one bearish? No, it is not bearish. This one is still bullish. So I can agree with you. Then I have a conflict of information. I have bearish gold seasonality. I have bullish technical analysis. I have maybe fundamental bullish on gold. what am I going to do? What is my take then? My take then is actually going to be I don't trade, because that I want those three to fit together. So, can you make money on gold? Can you buy gold? Is it still bullish? Is it still a viable investment? Sure. I agree with myself, at least there, that yes, if you take those considerations and you take technically only or fundamental only, fine. But there is this monster consistency, and I'm not going to bother you with it, other than it is it mysterically, is it mysterically, yeah, just bends the seasonality way for some reason. I can't explain it, other than that's what happens. Let me explain. If we take which one was great earlier? Could say euro yen, for lack of a better, just fund currency. It doesn't really matter. Okay, so from 14th of April, sorry, from 14th of March, 24th, maybe, sorry, somewhere around here, up until 31st of March, should be, is it the wrong one? Should be a bullish trend. Okay. We go to the charts from 16th to 30th on euro yen. There's the 16th of March. That is 16th there. There until 31st of March. That's around there. That is, yeah, give or take 600 pips, give or take. Okay. Also, how deep respect for seasonality when it does go in a direction. So that's why I'm like, I don't really touch it if it doesn't go with it. And when it goes opposite of, if fundamentals and seasonality doesn't align, it generally goes in a range or something like that. So I have better things to do. But okay. And then we have 15th of April going now over all the way until June. Let's go see how this one is. Sharp ratio returns is pretty flat, not really great. Not great. Not great. Until 18th of May. Yeah, it's okay. It's sometimes it goes good and sometimes just flat. So okay. Seasonality euro yen going forward is not fantastically bullish, so I'll leave it alone. The euro becomes, it's still very bullish, so we will probably still go higher. Pound yen, just to mention that in the same breath, I did buy it previously, but I have taken my profit for the apparent reason that I don't feel like it's going to go higher. Feeling is different from actuals, but I didn't like that range bound it made. Meaning, if this one now goes higher, if this one makes a higher high, if we break above 66.80 and or breaks below 65.40, those are the true prices to break. So for me, it's basically just add an alert for pound yen, add an alert for pound yen, and then rest will be taken care of by TradingView. And I will have to see and enlighten myself if that, if that works out. New Zealand yen is now a different kettle of fish. I have to admit, I don't know what to do here. That's why I leave it alone, because I short it and I'm like, well, it's supposed to be bearish, but yen becomes even more bearish. For what reason? Why are you shorting, Evan? So That's the reason I take this one instead. But target is 17th of May. That's a date, not a price. Somebody had a raffle with me last week, like, Evan, you would never tell anyone when you exit, and you don't tell anyone the target. Okay. So target is what? 17th of May. The target is a Wednesday. And the stop loss is 74. 174. Okay. Are we all clear on that? Thank you very much. There was one I wanted to talk about. It was New Zealand CAD, pound New Zealand. Okay. Another one where you take higher high and higher lows. This is pure technical analysis. Okay. This one means I will take it a bit more shorter from, because pound is actually the driver in pound New Zealand. So whatever pound does, New Zealand does. You get me? So if I'm going to trade New Zealand, I am very at the mercy of pound. And you would imagine that it's going to be 50-50, right? It is not. So if it makes a higher high, catch the pullback. If it makes a higher high, catch the pullback. If it makes a higher high, and catch the pullback, and that's kind of the way to go. That's a day trade, and currently we don't have a higher high. We have got into some kind of range, pause, maybe it comes back down again. There's your buy at 99.20, and then we go higher. Great. But this one is a stepping stool 101. New Zealand CAD is a bit of a different kettle of fish, because I said to you that we would sell Center Pivot and M2, right? The problem is that it doesn't always hit Center Pivot of the week. It just falls. Then the next thing to do in that situation is, are you going to continue selling? What is my brain telling me? Once it doesn't hit the Center Pivot by the end of the week, are you still going to continue to sell? Are you not selling lower? Are you still selling lower highs? And are you able to, what do you call it in English? Are you able to keep yourself? Are you able to keep yourself grounded in an opportunistic environment? Are you able to keep yourself fresh? Because as a past last week, the number one, the epiphany has come upon me. The number one reason why you guys failing as traders isn't about strategy. Isn't about what your mother traumatized you with as a kid. It isn't about you doing this, something did this to you or whatever. It's actually the ability, which I have now understood, is the ability to enter this zone that I call peak performance trading zone. That you are no fear, no hesitation, no questions. It just goes. And that takes time to get to that mental state. And Poppy, I would argue that you have not been in that situation in 2023. Not necessarily totally, but you have left trading because you're out of that zone, right? You have not been able to catch the trade you want because you're second guessing, because you are hesitant, because you're not 100% sure that what you're going to do is profitable, or you're going to gain, or you're afraid of your stop loss, right? Because I remember us taking trades, was it back in August or something? I took them, you didn't. And then you got angry, or you got upset, or you got frustrated because I took them, I got the profits, you didn't. Right? So, what should your response be as a trader? Right? Is when you feel that situation, when you feel those emotions, sorry, you remove yourself from that situation. Because the more seconds, sorry, the more minutes you spend wondering, can I sell here? Can I sell here? Can I sell here? The more your brain is taking away the focus from you're just supposed to have like a limit order. Let's see if we can find New Zealand CAD. I have a limit order at 83.20. That support there. And 83.40. All right, cool. Cool. Then what? What am I going to do next now? There's nothing there. There's nothing else for me to do. And once, because I'm in that now, and the difference is how do you maintain? How do you get there? And that's going to become my biggest challenge for 2023 is for people to understand, is for you to understand, and for you to also achieve and experience positive trading experiences, mean that you're able to go through a plan, you're able to go through a trade that you took, not that I took for you, and you see the gratification, you see that it works and it goes. And if you're wondering to yourself, like, how do I trade? I mean, how do I get entries, and how do I stop having stupid trades? It is the simplest and most boring and probably moment is just wait for resistance. Just wait for resistance. But we want instant gratification. It's Monday morning. Come on, bros. Let's go. We're gonna go to get some profits. And by the end of the week, we're gonna buy a Lamborghini. But the actual answer to get a Lamborghini is just waiting for the best price. Because if you sold here, will you get a Lamborghini? No. If you sold here, will you get a Lamborghini? No. If you sold here, would you get a Lamborghini? Yay! If you sold here, would you get a Lamborghini? Yay! Because price fell. Why did it fall? Because it was a resistance. That actually matters. And the amount of traders, I'm not hiding on anyone. I know who you are. The amount of traders that I see sells here, it is astronomically high. On any trading, on any currency, it doesn't matter if it's New Zealand CAD or your dollar or whatever it is. That is a pullback to sell. And what we experienced last week and we saw last week was on euro dollar. Many people was average when price was up here. Many was averagely selling 109. And I applaud you for that, Poppy. I applaud you for that. I'm not shitting on you, by the way, by any moment, by any chance, by any means. But my point was, I want you to stay and keep being in a good headspace, right? I want you to understand what it takes and where you need to be to become even more profitable, even better trader, and that you didn't get your TPs right. What should your reaction be if you don't get your TPs right? What should you do as a professional trader if you so do so? And if you buy euro now, which probably could have done, by the way, if you buy euro now, is that the pinnacle of your trading history? Is that what you're going to show grandma? Grandma, look what I did. I bought 1992. Grandma's like, why did you do that, sir? Well, let me teach you. A, B, C, D, E, F, G. Okay, cool. Grandma agrees. Sounds possible. But do you know in your trading history what percentage of risk, what percentage of profitability that you have here, and what your TP should be in that specific situation? Do you know that's a higher risk trade? Do you know that you're mostly going to fail here more than anything else? Because if I put a buy now on euro dollar, current price, by the way, 50 pips in profit, 57 pips in TP, 1-to-1, bang. Will I hit target or will I hit stop loss? And I can bet you $10. I don't know who I'm going to give my $10 to, but I bet you $10. Small bet, not much. I bet you $10 this is going to hit stop loss if I took that trade. So the main thumbnail of this live is trade setups, right? Is there any trade setups out there? And I can tell you for free that that trading setup has a higher risk than that generally people don't see. Why does it have a higher risk of failing? Why is this worse trading? Why is this a worse trading than buying here, for example? Than buying here, for example. Why do I hit stop loss here, but not here sometimes? More times than not. One factor is that we were 20 pips off target for the month. We are late in the bullish trend. Not mean latest, but we are late. We're very high. 107 is much better to sell. Buy, sorry. 109, 108, sorry. 108 is much better to buy. 109.60 is very high. That's 100 pips, 160 pips difference. I would rather fight to get 108 entry than to get 109.60 entry and be like, yeah, but high, low, woo, woo, woo. We did a trend following trade. Woohoo! Yay! Because in my strategy, in my trading history, that's where I fail. That's where the stop losses sit. That's where things goes wrong. But can it go higher? Can it go to 109? So 110. Sorry, that's a 109. Yeah, 110.19. Yeah, sure. 111. Yeah, sure, it can. But the probability of it happening when I trade is less. It's only bad because your stop losses are far too big. No, okay. Okay, let me explain. That is a wrong assumption, puppy. Let me explain. Why do I say it's a bad trade? Because I have higher likeliness of hitting stop loss. I have a higher stop loss rate. And I don't want to be in that trading situation. The trading situation I should be in is at beginning of the uptrend, the beginning of the week, beginning of the beginning, right? And I see this as closer to the end. So it's where are we in the trend? Where are we in the session or season? Sorry, and also where. So that's kind of that. Where do I want to be now? Is my stop losses too big? No, they're absolutely appropriate. Meaning that whatever I do, there is a system to it, and if I am supposed to have 100 pip stop loss or 200 pip stop loss, it all comes down to my statistics, right? And my statistics is I should have 100 pip stop loss or more. That's a big stop loss, but that's why I'm more profitable, because when I go through my back testing, when I go through my back trading, sorry, if I have 50 pip stop loss, I lose more opportunities. When I have 100 pip stop loss, so I think 50 pips, I'm like 800 for the season. 100, I am okay, depending. Sometimes it can be like 1200 to like 4000, right? Depending. And then 150 pips, it's like still okay. It's like 1000 to 1200. So if I, that's like generally. So 50 pips is the worst. I lose more opportunities than I get. 100 is, yeah, they hit. I suffer, but I still get the good ones. 150 is a lot. So when I do lose, I lose a lot. But I still get the bigger moves. So I have found that I should have around that to get the most amount of pips, but I should also try to take those trades because they also give a good amount, and I should avoid those. That's just purely my statistics. Now, if that is supposed to be, is that depending on, yes. Is it mostly for your dollar? Sometimes. It's mostly yen the statistics is from, but also it covers euro. So if it's 150 pips stop loss, I am 100% wrong about the trend. I don't have that bad entry. I can have, by the way, but I don't. Like 100 pips is can still go in my direction in the end, but averagely, yeah, I should be able to get something going. So that's just and Poppy. Oh, that's fun. That's fun, Poppy. No, you triggered me. Oh, this is a good one. Oh, this is a good one. It doesn't matter. It has zero impact on your trading. It doesn't matter what your Sharpe ratio is. No, your risk reward ratio is. Some trades I have 10 to 1. Because because it goes to target on 15th of December and enter in August. Because if your strategy, the reason why I'm saying it so harshly, Poppy, is because if you're not profitable, it doesn't matter your risk ratio. It doesn't matter your stop loss. It doesn't matter anything. If you're not profitable, if you're not able to get a good entry, if you're not able to get a good trend, if you're not able to get all the other basic things first, because people go blind on it, Poppy. Okay. Eugene says, I've never had a platform to thank you, Evan, but your Wayne's pivot strategy is top notch. Thank you very much. I would have put stop loss below the structure and have a 4 ratio. Poppy, I agree. There's nothing wrong with that. But Sharpe risk reward ratio, sorry, no Sharpe ratio. Sharpe ratio is very important. But risk reward ratio, it's a buzzword. It has zero impact on your trading because you are supposed to have that in your take profit, right? But is the take profit supposed to be 4? It's supposed to be 5? It's supposed to be 10? What is it supposed to be? your ultimate goal is to reduce your losses, right, and increases your profit, right? That is irregardless of your risk reward ratio, and it kind of comes along with it. But the most important thing you need to focus on is toss risk reward ratio out of the vocabulary, because it's where people go wrong. It doesn't matter, because if your mindset doesn't work, risk reward ratio is like, it's kind of like asking for strawberries in a cake, but you forgot the sponge, you forgot the cream, you forgot the rose, you forgot the marzipan, you forgot the raspberry, you forgot the fruits, you forgot everything else. But you're asking about one that is on top and is the very end. And because if you get your generally, Poppy, not specifically, but generally, when you get your mentality, your psychology straight, and you are in your zone, you have perfected this trading thing, you don't need risk reward ratio. You just need to buy at your trade setup. You just need to follow your plan. You just need to take the profit when you're supposed to be. And you're supposed to be maybe on Sunday, enter a trade, put it on, leave, come back on Friday and say, did it work or not? Right? And in that system, because I've tried this, by the way, I can have 1-to-1 ratio, 1-to-1. I can be profitable, because if I gain every single time 100 pips, and I have more trades that I lose, I will always win, even by 1-to-1. If I have 3 winners and have 1 loss, I will always win. Right? Is catting good for a salm? Yeah. No, not at all. Absolutely horrible salm. It is not bearish. It is not bearish whatsoever. Poppy. It's where retail traders goes wrong. It's when you get delusioned. It's where you don't focus on the right thing. We all talk about stop loss. We all talk about risk. We all talk about lot size. That is more important than risk reward ratio, because you meant that I should have had a better risk reward ratio, which is just a random trade, by the way, and I didn't even take it. But the point is, if you can't master a whole lot of other things when it comes to trading, risk reward ratio, because people back in the days when I was trading and I was trying to get profitable, people would say, but I had 3-to-1, it was great. It was a great risk reward ratio. I was having my risk in good condition. Yeah, fine, good. I agree that you need to have 3-to-1, 4-to-1, or whatever risk reward ratio, but it doesn't help you getting the fundament in a trading in a trading journey, which is, you need to be stable mentally, you need to have a psychology, you need to have a strategy, you need to be executing your strategy, you need to remove your hesitation, you need to remove your anxiety, you need to remove your emotions, you need to remove everything that is stopping you from executing what you're supposed to be doing. And if his risk reward ratio is the one you're thinking, but this is a good trade because it has 3-to-1 or it has 4-to-1 and there's support, and then you have completely forgotten what you're supposed to be doing as a trader. You are supposed to be doing calculated risk based upon your statistics, based upon your trading setups, based upon previous experiences, based upon a logic, reasonable or realistic, objective trading style. Meaning, if you try to sell now and you have a 3-to-1 risk reward ratio, cool, good. But this is a terrible place to sell. Right? So that's the clue. And I'm not really talking to you, Poppy, as of specifically. But the risk reward ratio thing should be tossed off the charts. It's kind of like budgeting in corporate. It doesn't work. It doesn't lead to what you're supposed to be doing, because if you do budget and you do KPIs based upon budgeting, then people are just going to work on that budget, and they're just going to align their goals, and they're just going to do what the budget says, but it doesn't tell them to work for the best of the company. If you have a project you should do, but it takes a lot of money, more than you have budgeted for, but you didn't know because of the budget, but it would have made much more money for the company. Or you then do, based upon your budget, you then spend, like, you buy a TV for $10,000 because that was the left of the budget before the end of the year, because then next year you would have 10,000 less. So you have to show that you spend $10,000 or you spend your entire budget. The thing about trading is that when it comes to risk reward ratio, it is important to an extent, yes, but it completely misses the point of, if you are not properly prepped, properly trained, properly suited for trading, and you have gone through everything that is needed in your strategy, because that's the underlying factor that's going to give you profitability, is that you have a profitable strategy, that you have a mind that is so prepped, that is so good at doing that specific that they're trained to do, and risk reward ratio comes along with it. Yogati says this. Why are you not live very often? Well, there's a good reason for that. There is a mix-up in my life called mentorship sessions, and when I'm supposed to be live, and I prioritized helping you guys out. And meetings are supposed to end when I'm supposed to start streaming, and then they end 30 minutes late, which was supposed to time the time I was supposed to be live. So there is a, what do I choose? Do I choose to do what I love the most? Or do I choose to go to YouTube and do live stream, which is fair enough. Okay, for me, fine, good, nothing worry about that. But what am I here for? I'm here to help you guys out becoming a profitable traders. That's 100% what I'm gonna do. That's what fuels me. That's what wakes me up in the morning. Can I help you out on YouTube as well? Yes, I can. But yeah, that is what I'm doing this week. I put my trades on Sunday, and now I'm looking at it until I'm not looking at it until Friday at 8 p.m. Yeah. According to Pivot, your dollar is still far from M2 for a bull, so we expect a fall. So Eugene, when you're thinking when you have that situation, yes, you expecting a fall is probably not the word, but a pullback, yeah, which is a lower price, and then you probably want a reversal on the lower time frame, but yes. Zizikela says, "Hire me. I will do your scheduling to avoid mix-ups. I don't want money. Just your knowledge on seasonality and economics. It will be detrimental to my success in the future." Yeah, I do need help with something. I need somebody to go through all my meetings and write down all the most important things I've talked about in a meeting. But yeah, and I just need to get my things together. Also, I need to understand time zone differences, because I still haven't adapted to that. But that was that was 2 weeks ago. We changed times or something. So yeah, that's my bad. 100% my fault. Sorry. Take me down for it. Now that we're getting close to the month high, can we break that resistance since fundamentally? So Eugene, let me train you differently. I don't care about resistance to an extent. What I care about, does it hit my target for the month and the week? That's my out. And if that becomes a resistance, then so be it. Let me show you. Okay. When you go trade, and you think, well, what is resistance being made out of? It's being made of people taking profit, right? So if I hit target here, I'm out. And then later becomes the resistance. Okay. If I bought here, for example, bought here, took profit here, what happens? It goes into a range. The target or the range or whatever you call it in English, where you're supposed to take profit and becomes a range, that happens after when I'm done taking profit, right? Eugene says dollar is very weak. Yes, to an extent, but not everything is. Not everything is straightforward. Meaning that when we hit a target, we generally tend to pull back, and it's not obvious for the naked eye before it happens, and that's what happens when. That's why I am talking so harshly about get your target, take your target and run, because once you start analyzing, which I've done as well, by the way, I've done everything that is necessary. I have been like, let me see how the parties can go. Boom. 300 pips off, and I had $500 in profit, and I got 200, and I was so angry at myself. Why did you just take the profit, for crying out loud? It was there, straightforward, nothing in between. But if for some reason you're going to play the smart ass, Evan, I smack in the head. That's what happens to me. So I just learned the hard way that if I don't take the profit, that's just that. But what is my point? My point is, resistance is formed because of people taking profit, or because a trader starts selling, or because traders start selling there. So it's like an agreed area for transaction of direction, or to transfer the direction to somebody else. And to be honest with you, I just have so much respect for weekly and monthly take profit, because it's just humbled me so many times. That's where it comes from. But yeah. Is gold going back to 1960? Last week it reached a high. Okay, so gold. Okay. Let me talk about gold for a moment. Is gold bullish or bearish? We can collectively agree that gold is bullish. When we talk about gold collectively, we think of a target, right? We think of 2089 or 2100, as somebody talked about earlier. Okay, cool. So if you're still bullish, then everything is all right, right? There's nothing to worry about right now, right? So, can you buy here? Sure, if you want to. But seasonality, which I try to follow mostly, says it's going to be bearish for the next month. So, what is the question? The question that you have to ask yourself, do we break 1980? You said, is gold going back to 1960, which is down here? Which is, totally okay. Totally okay. But what does gold become then? Bearish. Technically, right? Why is it not the right place to sell? Which one? Is it gold you're talking about? Or what, Jane? What if you're talking about gold? is there's no lower lows. So let's go over to price action 101 with Ivan, where nothing makes sense and everything is just senseless. Okay, so in a bullish trend, we can all agree that this is bullish, right? Where is it? This one. Wrong. There we go. High, high, higher, low. Yeah. Higher high, higher low, higher high, higher low, blah blah blah. That becomes a swing low. We don't make a new higher high. We make a new low there. Okay. Then I want two lower lows. That is here, second lower low. Meaning we have broken below that support and that support. We've broken two supports on the 4 hour. Then it becomes bearish. Meaning when we go over to gold and we say, okay, what have we done so far? We have broken 0 support yet, or maybe 1, maybe there. So we're still very much bullish, right? So the point is, when you're looking at support and resistance, when you're looking at trend trading, when you look at gold for that matter, and you're thinking, should I sell up here? And why I'm so disagreeing with it is because gold is momentum trading 101, 100 million percent. Meaning, whatever the direction, whoever has control will make that market run as far as it goes. And if you sell against the trend, you are going to get punished so hard you can't even see twice. You can't even see with both eyes later on, right? So, meaning that you lose your account. So, if you want to sell it, you need to have proper technical analysis and proper rules in place for you to safeguard yourself. That's all I care about. I care about safeguarding you so you don't lose money. Meaning, on gold, you need to be very certain through technical analysis. You need to be very clear about what do you need to see before it happens, and don't come to me be like, well, I thought this was gonna happen because A, B, C, D, C, F, G. But it was never, because if this one now goes higher and you sold, you look like the idiot, right? You sold the bullish trend. And if you go to me and like, I sold the bullish trend, okay, cool. Why did you do that? Stop doing that. That's bad behavior, right? That's misbehaving, and you should get rid of that. You should get rid of that straight away, right? So on the 4 hour, we're still bullish. That means you can still look for buys. Doesn't mean they're going to be profitable on buys, but you are still going to need technical analysis to agree with your theory. Let's say you sold Friday. You have a sell up here. It's a selling of higher highs. Is that profitable? It may be. I don't know. I don't know if it's profitable for you. It's not for me. So it's very clear there, right? But what about a 1 hour then, right? What are we seeing here? Double bottom, higher high. Can you look for that one as support? Sure. There's your buy there. But can you sell up here? No. I wouldn't. On gold. So therefore, I say selling gold is not a good thing to do, because it only leads to more losses. Um, 2021 is your next resistance, okay? I disagree. I welcome your opinion, but I completely disagree. You said 2030. 2030, I can somehow agree, but I would rather say I would say 2034, 2030, give or take. I can agree to that. But why we're going to use 2020? Why we're going to use 2021? Why do I disagree with that? Let me explain. When you see reversals of trend, okay, let's say this is a reversal. Where do market generally pause? Here. They don't pause here. When you see reversal of trend, you generally see the reaction up there, just at the bottom of the, even though that didn't work out though, by the way. But let me show you differently, for example. Here. There, bottom of those wicks there, or here, was reacted to. Sure, it was used. This one was later used. Fine, fair enough. But I want you to reach for this one, because if we truly are supposed to be bearish, this is the most respected one. This one is broken more times. So that's it's just a psychology thing more than anything else. Like, try to reach for the stars, and like, even though it's easy money to be like, or easy analysis in terms of, just looking for the first resistance. But I mean, sure. But the amount of times this one comes back up here and goes back down, and I sold here and it stopped me out here, is endless. You're much welcome, CMF Creations. What are you saying? LC Yen. Okay. Aussie Yen. I need coffee on that one, actually, I think. Can you give me a moment to drink some coffee? Don't worry, Poppy. Don't worry. Don't worry. The thing about Aussie Yen is that we are supposed to peak seasonality soon. So I'm very hesitant on buying it, even though I have been a buyer. I'm weak on the yen. Aussie is also going to be weak now, so it's, if it breaks below here, it's kind of bearish. So any continuation further will be great, but we have also had a very good trend. We have now paused. So if we break 89.50, then it's bearish. Even though I want to look for a buy, it's very high. I want it to go higher. Australian dollar, you're a seller. Okay, cool, great. Yeah, nothing else to say there, to be honest. Bobby, you should Google my name and you can give me a call, and I know we can have some fun. Don't worry. My only interest is making you a better trader. Don't worry. But yeah, sure. Technically bearish, yes, but dollar is supposed to be weak, so it messes my brain. So I wouldn't trade it. That's me. You're Aussie, Bob. I can agree with that. I can agree with that one, actually. That one I can agree with. Don't trade those. Yeah, bullish. Yeah, cool. Come back to support. Yeah, cool. Buy there. Look for continuation of trend. Yeah, cool. Yeah, cool. Good. Good. So, technically, or fundamentally on CAD at the moment, CAD is supposed to be bearish because it's supposed to peak. Oil is supposed to rise. What? What do you mean? I'll tell you. The reason why oil will rise because of one is, well, small part of it is the reduced production supply. Secondly, we are seeing inflation coming down, which in turn will lead to more demand. And three, China's coming back online. They are like 30% of demand for the oil market. So demand up, supply down, a bit there. We are also. Oh, is this not supposed to be go low or go? Yeah, I think. My head is getting drowned. Yeah, I thought it was bullish now, actually. But I was a bit early. So soon bullish again, fundamentally. Great returns, actually. Great returns. Maybe just take away 2008, maybe. 2008. 2020 is right. Yeah. Still a great trade. Yeah, still a great trade. So yeah. So that's kind of like opposite of each other. So CAD dependence on oil has gone down the past years. So CAD is not necessarily the same thing as buying oil. I have already done it. I have said, yeah, well, euro is bullish because of higher interest rate expectations. Aussie peaking. Fundamentally, technically, it's a bullish trend. Look for support, either coming back down to the one I showed you or a brand new higher high and look for a buying. Congratulations. Yes, that's a great one. Australian dollar, I don't like because both are bearish in my mind, both Aussie and dollar. Therefore, I don't like that trade. That's my analysis. Fundamentally, we're supposed to be bearish on dollar, bullish on bearish on Aussie because they're peaking interest rates. They are not going to increase interest rates, increasing interest rate more now, and we are not going to be seeing much higher interest rates from America. Meaning, but yeah, Aussie is supposed to fall seasonality wise. So yes, but it still is not a trade that I would take. Okay. Pops the Norwegian question. Why is NOK so weak? A, B, C, D, E. Number 1, number 2, number 3, number 4, number 5 reason is foreign investors are leaving Norway. Foreign investors are leaving Norway. That's the number 1 reason why we have weak dollar, weak Norwegian krone. The other one is the central bank is still selling krone, as far as I know. So there is that. We also have, because of inflation, everything has become so expensive that is less favorable to invest in Norway. Fourthly, we have higher taxes and whatever dumb ideas the current government has. Yes, I said that, dumb ideas, because it increases tax pressure on the owners. Because openness supposed to have any wealthy people in Norway. So, yeah, I'm ranting, by the way. Everything is stupid. So they have what? They have increased. They have done taxes on natural resources, like 50% or so. They have increased taxes for corporates. They have increased taxes for fortune. They or done that, yeah. And I guess they're going to do heritage tax. They're going to increase. It becomes less and less favorable to be investor in Norway, and they would rather go to another country. So it has nothing to do with oil and gas. And I also saw that the trade balance of Norway was historically low. So that might have something to do with it. There's a gap on oil. Is it not going to correct first? Alka Twist. Let me explain to you. Welcome, by the way, to how Ivan explains things that absolutely makes no sense, other than it is what the market does. So let me explain. The OPEC, which controls supply, Saudi Arabia, I think it was, said they're going to cut. They're going to cut 500,000, 500. Okay, I can't even spell today. Sorry, lack of coffee in my butt. 500,000 less barrels per day. I think it's around. I'm not too sure, but I think it's around 22 million barrels per day at the moment production. Okay? That's around the production. I'm not too sure exactly, but give or take. So there is a percentage there that they are decreasing. That is the gap. Why is it not correcting? Because it doesn't need to close the gap. It doesn't need to correct, because what is the reason for why it would close the gap? If OPEC comes out and says, we just joked, we're not going to do it anymore, that would close the gap. If you reverse the information given, or that the impact on the information is no longer relevant, that's when it closes the gap. But if the situation accelerates or becomes worse, or there's more demand for oil, for example, it's still going to continue higher. The other one, wouldn't people take profit once they hit the target or something and then come back down again? Yes, it can do that, but there's no automatic in it. Automatic. There's no automation in it. So when it comes to gap theory, I don't know which gap theory you're using, but this is basically 100% behavioral finance more than anything else. And it all comes down to the question, is the new news still relevant? Number two, is it escalating? That's what you have to look into. Because if you look into oil and you look into 3rd of January, something like that, in 2020, we had that kind of situation here where we gapped up. Okay, we gapped up here because of a missile strike, the killings of Soleimani, a high rank official in the Iranian Revolution Guard by United States of America. They retaliate, but they miss the military base. And no more attacks happened after that. So, by the way, kudos to Iran for not hitting and killing too many Americans, which would then lead to Americans hiding back again. They killed him in the airport was it Erbil in Iraq or something? Anywho, doesn't really matter. There was no escalation of the situation that made the oil fell down again. That's all. Thanks for asking. I thought low currency would encourage foreign investors, not when the business environment is deteriorating. You're wondering why all the Norwegian, you think, yeah, it also has, I don't know how much impact it has, but it's some small impact that but many wealthy people is now leaving to Switzerland, to tax havens, to avoid taxes. They have to sell kroner to get Swiss franc or whatever. But it's just a sentiment. So people are doing their things. Take care, Roxana. So, Euro New Zealand, buy. New Zealand dollar, sell. New Zealand yen, sell. New Zealand CAD, sell. Pound New Zealand, buy. Those are my forward guidance forward going trades. So thank you guys for jumping in. I've been here for 1.5 hours. Hope you have had a fun day. And also New Zealand, also bullish. Yeah, buying that one too. Coming back down. Good. Good. Yeah. Boom. See you. If you want to be a subscriber, totally up to you. If you want to like this stream, totally up to you. Hope it gave you value. Hope I answered your question. And Poppy, give me a call. You'll find my number on the internet. That's my WhatsApp number.